Listen, I know on the surface, Dave Ramsey's advice, like it's good advice. Stay out of debt, pay your bills, live below your means. Those are all things that I partially agree with. But what I don't agree with is his advice when it comes to buying a house. And I'm gonna explain why, and I'm gonna give you real world examples. Now, the first time this came on my radar was when I had one of my employees talking to me about the fact that they were trying to pay off their student loans before getting into a home because Dave Ramsey told them it was a bad idea to buy a house until you were completely debt-free, until your cars were paid off, your student loans were paid off, and everything was paid off. And although I would agree, yeah, that makes sense in a perfect world, maybe back in the day in the 70s when you could pay off your student loans in, I don't know, 2 weeks. But today, if you follow his advice as it relates to buying a house, this will be financially crippling and will leave you broke. And it is terrible, terrible advice. So I'm gonna break these down one by one and I'm gonna give you actual real world examples. My whole point is that paying off your student loans before buying a house is by far some of the worst advice I've ever heard. And here's why. Let's say you took that advice in 2020. You had enough money saved up to buy a house. Some of his other dumb advice comes in. He's telling you to save a minimum of 20% down. And let's say you had 10% or 5% down, just enough to get into a house. And you're like, well, maybe he's right. Maybe we should save up a little bit more until we get in. Well, the same house you could have bought in 2020 for $500,000 today will cost you about $700,000. And in 2020, you could have gotten that with a 3% rate, but today you'd be paying about 6% in terms of your rate. And how do I know this? Because I actually experienced this because one of the properties I bought in 2020 for $515,000 with 5% down, which is just over 25 grand, today is worth over $700,000, and that's conservatively. At the height, it was worth about $830 in 2023 before the market really started to soften. And even in 2023, if I was trying to sell, I would not have listed for $830. I would have probably listed closer to $730 because I'm not a stupid seller that has unrealistic expectations when it comes to what I can sell my house for. I know how to read the market and price things appropriately to get something to move if I'm serious about selling. If I'm a greedy seller and I just want to hold it forever, I'll approach that differently. But my whole point is that not only would listening to Dave Ramsey have cost you the opportunity to buy that home, you would have been priced out of affording that same home 6 years later, even if you had saved up the money for the down payment by then. So my advice is do not save up for 20%. In fact, if you can get into a house and you can afford the house and you can do it with no money down, you'd be better off using that money that you would have spent on the down payment as a cash reserve. Cash is king when it comes to business and to debt, and especially if it's your first mortgage. Let's say you're watching this right now and you have 10% down saved up and you're waiting till you get to 20% and you're looking at a house right now that's 500 grand and you want to afford it. Part of this advice has to do with market timing, because if you look at market timing in 2020, it was a hot market and interest rates were super low. It made no sense to wait because that property, the second I started renting it out, I was able to cash flow it immediately because I had such a low interest rate. That is the power of cheap financing. But today, if I was looking at something and nothing was really affordable, even if it was a rental property or just a home I'm trying to live in, if nothing was really affordable or I could afford it, there's two ways to make a property affordable. You find, let's say, 3 or 4 properties that you like, and then you put in offers that are below asking, and they might be 10 or 20% below asking in today's market. And guess what? People are accepting those offers today because the percentage of homes that are actually selling right now compared to the ones that were selling in 2020 and 2021 is substantially lower. We have record inventory, and in fact, if you want to know what the housing market's doing in several big major metropolitan areas, or you have a specific metro you'd like to know about, I'll make sure to link a video at the end of this video where I talk more about the housing market and its current state of affairs right now, because the truth is now is a great time to buy because there's so much inventory. You still have a lot of stubborn sellers that won't lower their prices, but we don't care about the stubborn sellers because they're not going to sell their home. What we care about is 50% of sellers that are actually reasonable and willing to accept an offer that is closer to market and what their house might actually be worth, given the other macroeconomic conditions like interest rates and inventory and the fact that we are in a very strong buyer's market right now. Now, if I had listened to Dave Ramsey on that house, that would have been about $200,000 in equity I missed out on. I also would have missed out on about $300,000 in equity I have in a commercial building and another $300,000 I have in my personal residence just because I was waiting on the sidelines, waiting to buy. Now, this is why not listening to Dave Ramsey is more important now more than ever. 40 or 50 years ago, or maybe even 30 years ago, the appreciation that we would see in the real estate market, it's always been volatile in certain markets that are more indicator markets, places like Phoenix or Las Vegas. But the truth is as soon as you buy an asset, what happens is time becomes your friend, meaning the longer you hold that asset, the more it goes up in value over time, not in the short term. For example, if you bought a house today, it might be flat in terms of equity, in terms of how much that property is worth 2, 3, 4 years from now. But right now, we're in the middle of a quantitative easing cycle, meaning that interest rates are lowering and interest rates are coming down slowly but surely. We finally have mortgage rates now down under 6, which is the lowest they've been since 2020. And when the market switches, it switches quick. When rates get down to 5 or under 5, do you want to be battling to try and get into a home with all the other first-time buyers in the market? Or do you want to do it now when the market has softened? In some of the markets I'm in, for example, I represent Southern California and Denver, a lot of these markets are down 15 to 20% depending on the zip code, which is a pretty substantial fall. And so if we have another 10% to go, all you do is ask for a 10% discount today when you buy it. And guess what? Realistic sellers will take that because they saw what happened and there's still money's up because they probably bought that house 10 years ago or 15 years ago and they've got a lot of equity in it. The reason I touched about, waiting for the down payment and paying off your student loans, those are two of the most destructive pieces of financial advice Dave Ramsey gives. I'll talk about another piece of advice that he gives that I think is also terrible, but I started with those because I think they're the most destructive. And that is that he tells you to be able to afford a 15-year fixed mortgage payment and a 25% DTI. What that means, 25% debt to income ratio means that let's say your mortgage is $4,000 a month. Well, you should be making $16,000 a month household income. First off, the average median income is nowhere near $16,000 a month in terms of income, but the average mortgage at a 6% interest rate when you have a median home price of $600,000 like we do in Denver puts you at about a $4,000 payment. So it's not realistic advice. And again, what happens with that your payment is not fixed forever because you can refinance later. For example, if you bought a house today or in the next 3 months, I don't care what your interest rate is, chances are with the current macroeconomic conditions, because we're going through an easing cycle, interest rates are going to be lower in probably a year, year and a half. You look at what Trump is doing right now, and the fact that Jerome Powell is going to be out of the Federal Reserve as of 2026, at least in his current role. He's going to be in a different role. We will likely have a Fed chair that is more dovish, meaning they want to lower rates to help stimulate the economy, because right now, all of the indicators are flashing a warning sign that we are headed for a recession, and that's not a good thing. That means higher unemployment and a bunch of other stuff that the government does not want. And so if you can barely afford something and you have enough cash reserves to where you can afford it, I promise you, anytime you buy a piece of real estate, your first piece of property is going to be the most nerve-wracking purchase. Everything is going to terrify you. Every inspection objection is going to terrify you. Every interest rate, quote or whatever is just, the whole process is going to be a little bit nerve-wracking. You're doing a major purchase and you're taking on a major debt. The bottom line is you have to go about it logically and understand that you can refinance later, which you can do only if you have enough equity in the property. That is a truth. But 2 years from now, you're likely going to have enough equity in the property as long as you don't overpay, which that comes down to having a savvy agent that makes sure they look at the property you're purchasing on a price per square foot basis. And so they know that you're getting into something that's not just affordable for you, but is also a good deal and is going to put you in a good, healthy equity position a few years from now. All of my properties, I am under 70 or 60% LTV, loan to value. Some of them are even under 50%. The reason I point that out is that I brought all these properties with the absolute minimal down payment that I possibly could. One of them was a commercial property I bought with a hard money loan, and my stepmom helped me cushion my down payment a little bit so that way I could borrow money from her, and she put a second on the property, meaning that she was a second lender, and I paid her interest. It wasn't like, it was some rich kid hand-me-down. I still had to pay her, and I paid her back every dime plus interest, and she was very happy with that, and I was happy with that because when I was done, I had a property that I had a little bit of equity in, and I started to build a nest egg for myself, and it really helped my financial future by just getting into that first property, and that was a commercial property that I was using to run my business. So my story is a little bit different because I wasn't trying to buy a house first. I bought mostly investment properties before I even bought my primary residence because we had super cheap rent in the place we were living in. So it made sense to just keep renting and buying rental properties instead. And so in summary, if you're going to be listening to Dave Ramsey and you hate me and you think I'm an idiot and blah, 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 whatever, I understand for kind of the first time in my life, because of where I'm at in my life, I understand the simplicity of living debt-free. I understand the simplicity of not having a mortgage, even if it's a 3 or a 4% mortgage. The peace of mind of having that paid off, of having a car that's paid off, of not pursuing a life that's riddled with just, pursuing possessions and always getting better stuff. Sure, there's some level of simplicity with that, but the truth is the less you play the game, the less debt you pay, the more you're going to pay in taxes, right? And so for Dave Ramsey to give you this advice, when his company does $300 million a year in annual revenue, this guy is so far out of touch with the reality of the situation for the average middle American individual that he can't give you advice that's accurate because he's giving you advice from 40 years ago. He's not giving you advice that's relevant for today when the federal government is actively debasing our currency, which is a fancy way for saying inflating the everything and making everything so expensive because the currency is worth nothing, because they have no choice but to print money or to fire people and trim down government spending. With they don't want to trim down government spending. They tried to do that with Doge, and I don't want to get on some other rant about government spending and whatever. My point is, make your own decision. You want to listen to Dave Ramsey? Go listen to Dave. This is just an alternate perspective. Hopefully I brought some insight, but let me know what you think in the comment section. Do you think Dave Ramsey is a numbskull like me? Or do you think I'm the numbskull that's giving bad advice? I'm legit curious to hear your thoughts. And if you're a first-time buyer in one of the markets I represent, there's a link in the description that gives you a little bit more information about how I'm actually helping first-time buyers get into home by giving up my commissions towards that down payment, which is actually considered mortgage fraud if you do it improperly. And so there's a way that we do it to make it so that it's legal. That just involves disclosure, making sure that the lender knows. There's a little bit more to it than that. And you might be saying, well, how are you going to make money as a realtor if you're giving up your commission? And that's a great question. For me, I'm looking to make money off of YouTube. And so for me, it's about creating educational content. So the way I can make money on that transaction is by recording some of that transaction or showcasing some of the properties we're looking at, because I will then use that as an example of what it actually looks like to be a practitioner. Because when I look at what it actually means to be grounded in reality as a practitioner in real estate, because when I look at the situation now, it is a dire situation. It's impossible to buy for, this is why millennials and zennials are so jaded right now. They're entering the workforce or they're entering college and they have massive amounts of student loan debt, and the whole system seems like a scam, because guess what? It is a scam. That's why I don't think you should go to school. I don't think you should take on student loans. I think instead you should figure out how to get good at making money and how to get good at spending less than you make, putting your money into assets that make you money and spit off interest and cash flow, so that you can have a good quality of life and not be chasing some dream or some fantasy that you see on the internet. Because everyone on the internet has a penthouse suite and everyone on the internet has a Lamborghini, and it's all a fugazi. It's all a lie. That's not how life actually works. That's not what's actually going on for the average 20-year-old. That 20-year-old kid that's selling you a course on how they make $1 million a month is a liar. He doesn't actually do that. Well, he does, but he does it by selling you a course on how to make $1 million a month. And if you're not in Denver and so you can't take advantage of that, you can send this video to a potential first-time home buyer in Denver and let them know. But the fact remains, I just sold my company, and my goal this year is to do an insane amount of deals, because I want to be a part of the solution and I want to help people get into a piece of property. Because for me, it was very life-changing for me. Like I said, I always know what goes around comes around, and guess what? You're only a first-time buyer once, so I can always make money on the second round. Anyways, I hope you found this content helpful. There's a few videos popping up on the screen that YouTube thinks you should watch, so check those out if you haven't done so already, and I'll catch you on the next episode. Peace.